Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our 4 agreements. Surrender and let go of the past. Whatever life takes away from you, let it go. When you surrender and let go of your past, you enjoy living right here, right now. Letting go of the past means that you can enjoy the dream that is happening right here, right now. Market-wise, let's take a look at it out. We had the Dow up 26, NASDAQ up 18, S&P's up 9, gold contract up $6.20, trading out at $1,620 an ounce. Silver up 51 cents at $28.51 an ounce. Copper flat at $3.30 a pound. Light sweet crude up 27 cents at $84.25 a barrel. Bonds down 29 ticks at 150.14. King dollar up 19 ticks at 82.87. That little baby's building some cars. It wants to get into that 89 to 92 area. Pretty intense, actually. But I expect we're going to build cars here for a week, week and a half. Euro down 49 ticks at 124.50. That baby is building cars to get into the 119 area. Yen up 40 at 150 at 78.74. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay, we are at 1287. Now, we do 694 million shares out here today. That 694 is coming into 1.3 billion. Okay, so you can see what we have happening here. You have a B to a C of an ABC structure on the way down. It's a very large one. And now what we've done here, folks, is this. We had divergence, meaning that we had broken on Friday the B point of very large structures. And the S&P and the Dow Industrials and in the NASDAQ, the indices themselves didn't have the volume. The ETF structure did have the volume. And the small caps, you had the harmony where the indice broke the B volume, the ETF structure broke. So when you see that happen, where we're really going to stop paying attention to is the NASDAQ. These are going to get in harmony. Now, the wild thing about something like this is that you're building much more cars for lower price. And your confirmation is just coming out here today. This is pretty anemic. But what you'll see, it won't just be today. You're going to see it the next few days. This baby will get a bounce going. The bounce will be on lighter volume, and the structure that has been building cars will bring you a structure going all the way back to the 15th, 16th of May. So where we are right now is that the S&P is at 1286. It would still have to get inside 1291 in order to get to the top of that range. I expect it's going to happen. Now, let's go over to the Dow Industrials. We look at the Dow. What we have with the Dow is this. Dow today, really a sideways move, up 26 bucks, no big deal. The Dow somehow is going to try to, jump up to this 12,336 mark. We'll see how it tries to get there, but it somehow, some way, that baby wants to get up there. Now, NASDAQ Composite. Okay, the Composite, we are at 2778. So what the Composite did is get back inside the range, slightly higher range. That range can take it right up to 2882. We're at 2778. Now, the Composite also did not have the juice. We did 1.5 billion. That 1.5 billion is going into 2.7 billion. It's not even close. But that whole area, just like the S&Ps, that whole area from the 17th of May will be the cause building in order to run into those lows. Okay, now let's go over to the Russell 2000, because the Russell 2000 is really interesting, and this is why. The Russell has talked, walked, and squawked more than any of the indices, but wait till you see what it's done. Okay, so what the Russell has done is this. The Russell took out the B point, took it out with volume, all of the above, and then just stopped in its tracks. Now, the reason it stopped in its tracks, folks, is that when you go over to the left-hand side and we go over to December 16th, when we came off the bottom in December, that's where we went from 716 up to 840 in the Russell. Well, when we came off that bottom, you came off that bottom with huge volume. It was 663 million shares, okay? So that the high of that is 730.73. So watch what happened. We broke the B point. The B point on the Russell 2000 had 306 million shares. That B point was established on May 18th. So we're down on 306 million. We went topside with 201 million. Classic ABC down. We come back down 4 days later, last Friday. Well, actually Thursday I was screaming I was going to do it. We did 428 million shares. We got to a price point of 751. And you got to remember that the high of the December one is 730. Well, what ends up happening yesterday? You get to 729.75. You do that with 222 million shares versus what? Versus 663. So what you have there is that you broke a B point, have the volume to do a structure down, but you know what? Boom, you're coming right into a high volume level. Stops it. Now the good news, if you're long, is that it stops it and you're going to have a chance to get out. The bad news is this, folks. Depending on how long you've been listening to me, the worst thing that you can do, or the best thing you can do, depending if we're at highs or lows, is you stop right before the price point. And in this case, we stopped right before the lows that were established in December. And then you start building cause. Now, how do you know if you're building cause for higher or lower? What you do is that if we put a channel just around the highs and the lows going back to May 17th, what you're going to see is that every single time you're down, the volume accelerates. First time we were down, 306 million shares. Second time you're down, 428. Third time you're down, 272. Versus how we go up. Okay? That's your correlations. That's your heads up as to where the power is, where the force is, and what you have happening in the marketplace. Now, if I go over to the IWM, this is what you have. That was the Russell 2000, the actual indice. Now, watch what you have in the IWM. It's the same setup. IWM, we had the B point out there established at $74.49. That was established on the 15th. 77 million shares. Well, bottom line, you come down with 59 million, you break it with 76 million. So 76 million versus 77 million. Okay? Now, where's it stop in its tracks? It stops in its tracks yesterday at 72.94. It had 50 million shares. Well, guess what? It was going into 52 million shares. It was going into 77 million shares. That's doing the same thing. It's building cause for lower price. Okay, so now here's the good news or the bad news, depending on where you're at. A break, folks, of the December lows, okay, sets up, okay, a very large leg down, okay? In the IWM, it sets up a leg down into 70, 60, 56. So let me see what 56 is. We're at 74 right now. 56. Well, 56 is down to the 56 is down to the August 2010 lows. Now, the thing that's going to be really wild here is this. Now, check this out. This is amazing, actually. The lows that were established in 2010 were in August. The lows that were established in 2011 were in October, except the first leg was down in August. Just a quick one. So the bottom line, folks, is that we are in not only the season, we have the volume characteristics, it's all of the above. Okay, so protect yourself out there. Because the next level, so watch how this goes. You get down there, the next level, you know, if you break those levels down there at August, and we've been down there twice, well, you know where we're going. It's the infamous 825 S&P. This is Tom O'Brien, this is TFNN. Appreciate all you tigers and tigresses growling and prowling out there with us. We had the Dow up 26, NASDAQ up 18, S&P's up 7. We'll be right back, folks.